Stocks are tumbling on Tuesday, and it is all about trade. Joining me is Jonathan Corpina to talk just that, whether you're talking about U.S., China, or our portfolios. How you doing, Jonathan?
Good morning. How are you, Olivia?
I'm very well, thank you. Stocks not doing so well. Jonathan, it's not our fault. I mean, there's lots of drama going on with trade tensions. Is there any way we can take some sort of control with what's going on?
Look, I think we continually talk about the same topic, and we continue to talk about the rhetoric that keeps going back and forth between U.S. and China as far as trade relations are concerned. And I think what's happening now is that President Trump is trying to negotiate this tariff agreement in the public through Twitter. And I don't feel that that's going to really accomplish much. Anytime we feel like we're getting close, and whether that perception of close is being distributed by the United States or distributed by China, anytime we feel close, I think investors have a better feel that the blueprint of how this is going to look down the road is going to be displayed to us. And when we get tweets like we did yesterday, I think that adds a lot of confusion and actually cause investors to feel that the end is not near. We're nowhere closer to a resolution than we were last month.
Oh, sure. I mean, we're looking at our portfolios and we're like, Lord, take the wheel. I mean, right? It's very confusing. So should we ignore the tweets and just focus on what we got going on?
I think you can't ignore the tweets, but I don't think you should react to the tweets. And I think we need to continue to keep things into perspective, right? We're at the beginning of May now. S&P's up, 14-15% on the year. So a pullback might be considered healthy, considering all the gray cloud headlines that are still out there, right? We talk about interest rates, we talk about oil prices, we talk about, you and I talk about North Korea. There's so many different things that are going on out there that can put pressure on the market, just hasn't yet. So a pullback might be welcomed.
And with those 15% gains in the S&P that you discussed for 2019, some skeptical aspects are that stocks weren't meeting their 52-week high as much as, let's say, other rallies. So what's a way that you like to measure the health of the stock market?
I think you have to look at just broader indices, right? We look at the S&P a lot, which is 500 stocks. But focusing on the Russell, I think that too really gives investors a better, clearer, more spread out picture of what's going on with individual stocks and what's going on with our economy. But you have to understand that this is a whole new world that we're living in right now. Companies are still adjusting to oil prices. They're still adjusting to interest rates and tax reform and not knowing what tariffs are going to look like. So yes, as these indices do move higher, we're not seeing a total correlation across the top board of 52-week highs that are occurring in individual stocks and individual sectors. But I think that's normal right now, and that adds to just the validation that the uncertainty is there is what's really going to happen in our economy and what's really going to happen in our markets. And I'll throw another thing on top. We're close to the middle of 2019, and 2020 is right around the corner, and a whole new election process is going to happen, and a lot of this rhetoric and a lot of this flexing of muscles is probably a little bit of a foreshadow as to what we're going to see.
So what do you think President Trump will do next?
I think he's going to be forced at this point in a short period of time to make it appear as if there is some sort of resolution that's going to get negotiated with China. I think that's going to be his clear win in his win column if he can get that done sooner than later. So enforcing higher tariffs and stricter policy might not be the way to go. He's going to have to concede in some areas. I don't know if conceding is within his personality, but we're going to have to see.
All of that will, of course, impact our lives, our portfolios. So we will watch out for that. Thank you so much, Jonathan. Always great talking to you on Tuesday.
Thanks, Liv. Always a pleasure.